Is it time to double down on UiPath or Path stock, especially because Path is down around 80% this past year? Today alone, it's down around 12-15%, depending on the hour. That's because of a weak quarterly outlook or weak quarterly update where management talks about a choppy macro environment. So the economic environment clearly getting worse, talking about, hey, we're just updating based on what we see in our pipeline. And management also talks about how our business, which is more than half outside the US, priced in local currency, is coming under pressure because the US dollar, which has become a safe haven as other foreign currencies have come under pressure because of assumptions of like, hey, how bad will budget deficits get with an energy crisis? US dollar becoming a safe haven. And so these businesses like UiPath, which has a lot of foreign currency exposure, coming under pressure on the revenue and expense side potentially. So this is a problem that a lot of US companies will face because, look, they have a lot of business outside the US. Now, their guidance isn't terrible. When you look at saying, hey, our annualized recurring revenue by the end of the year, still expecting around 1.2 billion in revenue, around 25% growth. If you exclude the impact of foreign currency, closer to 30% annualized recurring revenue growth. Revenue is a bit slower than that, partly due to the lumpiness of licensing sales. So you look at this decline, this 80% decline, and go, well, what's driving that? Is that, is the quality of the business deteriorating? Is the value of the business deteriorating? Is the growth? What is going on? Well, the quality, I'd argue, is still there. They're still rated the #1 player in the robotic process automation space. And management, has done some very intelligent acquisitions, in my opinion, like the acquisition of Reinfer, which further sort of expands their value proposition with the automation of unstructured communication. So this strikes me as an intelligent move. And management further goes on to say, look, we continue to hear from our customers that the breadth of our capabilities in UiPath's automation platform is why we win. We're the only company that offers a complete solution, including task and process mining, document understanding, test suite, robotic process automation, and low code deployed on-premise or in the cloud. So they have a full suite of solutions. And talking about, look, one of our solutions, task and process mining, it's key to helping customers discover new opportunities. So they may not even realize that something should be automated, but by having this sort of running in the background, it can give the suggestion, oh, this could be automated for you, save some time, focus on the higher, quality input stuff that you can work on. Now, the management also talks about it. Look, we're continuing to win share, winning key customers. They talk about Post Finance, a retail financial institution in Switzerland that has been using 2 different automation solutions this past 3 years. One is an automation player, one is a process mining, solution to help figure out what are the tasks that should be automated. They switched over to UiPath, which has the full suite of solutions. And this is a digital transformation. This is a secular tailwind, multiple years that I think this is going to play to UiPath's advantage. So thinking about quality, I think the quality is still there. Then it really comes down to valuation because they're still growing at a very good clip. So it really comes down to valuation. And this is a key point where if UiPath were valued, let's say at 7 times sales last year, then arguably, given that it trades at 7-8 times sales now, you would have had, just if there were no impact, if valuation effectively had stayed the same, your return as a shareholder would be driven entirely by their growth, their sales growth, which has been quite reasonable. So investors, if valuation had been reasonably priced last year, you would be up as a shareholder to the tune of 20-30%. But arguably valuation was egregiously expensive. You're looking at 30-40 times plus sales. And the reality is valuation does matter. Now it's approaching an area that's quite interesting. And the question is now the right price? Looking at valuation, it is important to recognize that they're still unprofitable on a GAAP basis. So generally accepted accounting principle, their cash burn is much better, largely because of significant stock-based compensation, but still losing profits, to the tune of 120 million a quarter, that is quite sizable, something that management will need to change. Okay, so where does UiPath stock go from here? First, if you're struggling with this investment environment, consider unrivaledinvesting.com for new ideas and a community of like-minded investors. In full disclosure, this is not financial advice. And so when I think about UiPath, I really do have 2 minds about it. The first hand, I'm looking at this saying, yeah, they're delivering great growth. They're tapping into this huge industry. They're probably going to have strong growth in the years ahead. really strong global customer base, 10,000 plus customers, really sticky business, 130% dollar-based net retention rate, would have been closer to 135% if you exclude the impact of Russian sanctions and foreign currency. So really sticky, really strong business. Their annualized recurring revenue growing over 40%, guiding to 25% for the year, closer to 30% excluding foreign currency. And management is saying, yeah, our adjusted free cash flow should be positive in 2024. So fiscal 24, that's next year. So that means you're getting to a more sustainable rate. Now, you're still going to have sizable dilution, which is to the tune of several $100 million each year, but that you're getting to this point where you don't need to tap down, pull down your cash balances, which is sizable. And so I think about this. One mind says, yeah, they're tapping into such a big market. They're the leader. There's a lot of players in this space. Why wouldn't one of them want to just acquire them? It's effectively a $10 billion purchase, maybe a little bit more, currently $7-8 billion market cap. So why, what prevents an acquirer from saying, hey, let's pay $10-15 billion? You see SAP is a player, one of the top players here. You see Microsoft's one of the top players here. What prevents an Oracle from saying, yeah, we're willing to buy UiPath. Let's put in a bid. At what point? And you've even seen private equity, step in with certain companies and sort of say, hey, we're willing to pay around or even higher where UiPath trades now on a price to sales multiple. And UiPath has very rich gross margins, around 80% gross margins. So that, private equity could think, okay, we get this business to scale and we could have real profits from here. So I think one of my minds thinks acquisition target. Then I put on a different hat and I go into another dimension, the dimension of a, sort of a more of a deep value investor. And keep in mind, in full disclosure, I do own, a teaser position in UiPath. And in my portfolio, it's sort of barbell approach. One side has quality value growth, and I can confidently say, you check off each box. And then the other is like, hey, a bunch of teaser positions where one of these lights, red light might be on, like, oh, it's got the growth, it's got the quality, but I'm not there yet on the valuation. And so I do try to have both because I enjoy that. That's for my own personal journey. Everyone has to figure out what's right for them. And so I look at this at UiPath now, sub $14 a share, around, $7-8 billion market cap, trading around 6-7 times forward annualized recurring revenue. I think given their rich gross margins, this business at, long-term scale could be around 25% profitability. I think, given that they're tapping into such a big market opportunity, I would expect that they could deliver, high teens, maybe mid-20s growth rate in the years ahead. They're expecting to do 30% this year when you factor out, the Russian sanctions and foreign currency. That arguably wouldn't always be a pressure for them. So think 5 years out, maybe the end multiple's around 20 times earnings, assuming a 15% tax rate, given that they have a global business operations. And so I think, maybe on the upside, and keep in mind, this is a hypothetical valuation framework. This entirely depends on management executing. If management's execution is way lower than this, then stock performance would be much, much worse. But if management does much, much better, then stock price could do even better, I'd argue. So I'm looking at this and I'm saying, based on a reasonable framework, maybe you can pencil out around 100% upside. If they're on the lower end of that, then it's closer to break even over the next 5 years. So two different hats, two different minds. One is like, oh, at some point, at some price, someone's going to say, hey, we want to acquire UiPath. The other hat is sort of saying, it's still not quite there where I'm personally ready to double down because it doesn't have those three, like, hey, I can really confidently say this is deep value or this is really strong value. And it is important to say, like, sometimes valuation, you should sort of say, yeah, the private market value's here and trades here, and that's a lot of upside. But I'd rather have that as sort of a kicker. And like one of my top holdings is a company where, I could say, yeah, the private market value is easily 50% higher. But even if they don't get acquired, you should still be able to pencil out reasonable growth. And that's, you should be able to pencil out reasonable growth in the fundamental business here, but they do need to prove their profitability. And that is going to be tricky for them in the years ahead. Every company, sort of goes through that struggle of sort of saying, yeah, we're significantly unprofitable now. Can you actually get to those real profit margins in the future? We'll see with UiPath. I do own that teaser stake, and I'm very curious how they perform in the years ahead, given that they have such a large opportunity, I'd argue. If you enjoyed this video on UiPath or Path stock, please make a point of hitting that thumbs up, hit that subscribe button, and thank you for watching Unrivaled Investing.